We're going to be talking about the digital tax account and cutting through the hype, hopefully. The announcement came back at the budget at the start of the year, well, back in March, and we've since had a sort of a drip feed of information come through, and in particular in the last couple of weeks, a bit more about the API strategy, which Steve will go into in a bit more detail. So I'm the managing editor at Accounting Web, and this is Steve Checkley. He's a director at TaxCalc. He's going to be providing a lot of useful information, particularly for practitioners who might want to get their head around the new digital tax account. So just a quick disclaimer, we're not HMRC, but we will try and put forward the facts that are known at the moment. Just before we do kick off, actually, if I could just have a kind of show of hands, kind of based on what you know already, who thinks that the digital tax account is a good idea? There's a couple there.
Yeah, not loads though. So see where this goes by the time we've explained a bit more about it.
And does anyone think it's going to really make much of a difference once it's been rolled out over the next 5 years? Yeah, the same people. Okay, great. And just before we do kick off into the main part of the session, Steve's just going to run through some of the terminology for those who might not be familiar with a lot of these acronyms.
Okay, this is where I get a bit more animated now, so because I like walking around when I do these things. So DTA. So you'll find in the industry lots and lots of different acronyms. DTA stands for the Digital Tax Account. So that's basically the account that all the individual taxpayers are going to have with HMRC. BTA, business tax accounts, they already exist for businesses. They will record PAYE, corporation tax, VAT. They're going to be essentially put on steroids a bit. And with sole traders, they'll link to digital tax accounts. APIs, application programming interface. So when we see in the media that HMRC are building APIs, they're building these application programming interfaces, which means allow one system to talk to another system. GDS is a governmental department that was set up under the coalition. So they're another department just like HMRC or Ministry of Justice or the DVLA. They basically provide as it says, government digital services, but they are pan-departmental. So they provide things that any government department might be able to build upon. HMRC, love these guys. And then there's BASDA, which is a non-profit trade organisation that TaxCalc is a part of. I'm quite involved in BASDA. It stands for the Business Application Software Developers Association. And we actually work very, very closely with HMRC, DWP, Cabinet Office. So when they come up with ideas and plans, we get early sight of them, get to consult. We obviously understand what our customers are wanting, and we kind of make sure that things get built that will ultimately benefit our customers. So, or indeed taxpayers and so on. So there we go.
Great, thanks, Steve. We're just going to look at really where this came from to start off with. Just another very quick question for the audience, but who saw it coming, really? Was it, did anyone anticipate this, or was it a complete sort of bolt out of the blue for most people? Bolt out of the blue, yeah. And I guess, Steve, where do you think this really came from? What are the origins of it?
We'd seen on GovUK, I don't know if you guys are au fait with GovUK and some of the wider things it does beyond HMRC, but they put documents out every now and then, discussion documents or proposals and things like that. And there was one which was talking about the pre-population of data in tax returns. That's about as much as we got to know as an industry. And then in the budget, the digital tax account was then announced. So we knew that there was going to be something, but not quite as far as it actually became.
And so in terms of where it came from, it was a bit of a surprise to you, but actually where it came from?
Yeah, so where it came from, so I've mentioned GDS, and Government Digital Services have, they produced a whole number of things over the last 5 years. So if I talk through, some of the digital things that the previous government and this government have done. So there's GovUK, all the executive agency parts of government have all been put under one website, whereas every department would have had different contracts and different outsourcing, things like that. They brought it all in-house. They haven't put it out to tender. I've been to GDS. It's basically a couple of floors with hundreds of people, and they're actually building all these things internally, which means they get them done quicker. And in the case of things like GovUK Verify, what was previously Identity Assurance, spookily quickly for government. From coming to power, doing lots of consultation and finding out and research and things like that, they built it within about 2 years, which is very, very quickly for government. And I actually got very, very involved in the identity assurance side of things, putting forward as they call us, call accounts agents, but putting forward the agent side of things, the business side of things, how the government plans weren't really going to be workable, put a lot of time and effort into the research and help them come to the conclusion that actually the government gateway is probably okay. So, but with extra security on it. So, digital market. This is where government then puts tenders. So if there are digital projects that they want to put together, they need to bring subcontractors in. That's all online now. And the digital dashboard, which is what various government departments will use to make sure that their online systems are performing. There's other things they want to do in the future as well. So I've read about things like a common payment system. There's something like 261 different ways of paying the government for taxes, wheelie bins, prescriptions, all sorts of things. So again, they could bring all that under one roof and make a lot of savings there. And then there's this other big thing which HMRC have built into, which is government as a platform. So trying to do everything through GovUK. And building reusable code, things that other departments can use. So instead of having all these different government departments that all do their own thing, it's trying to do it in a more uniform way. The next thing is efficiency savings. So a lot of this has come about because of efficiency savings. This government has said they want to make £10 billion worth of efficiency savings over the life of the Parliament. So, what does that mean really? It probably means reducing the size of the civil service. And HMRC push around something like 40 million pieces of paper at the moment. There's something like 1.4 million paper tax returns that are still handled. It means that people have still got to input those at the other end. So HMRC have said, they've got to do their part, and coming up with more modern, computerized, automated ways of doing these things is one way of them actually achieving the efficiency savings that they seek to desire. And then the last thing you could probably accuse HMRC of for this is having some vision. And it's rather interesting to find that the people that we are working with are not actually your traditional civil servants. They have come in from different industries. They're coming from Vodafone, from HSBC, from other areas, banks that have actually done a lot of this. And they are, quite commercially driven, dare I say, of HMRC. But they are. They want to bring it forward and use best practice, not try to reinvent it themselves, involving the market, the third-party software developers at a fairly early stage to, get our input, our take. Could we use this? Would our customers use it? So they've been really open, which is good, really, at the end of the day.
Great. So, that kind of looks at where it came from. There's efficiency and savings and HMRC vision. So what do we actually know now? What are the bare facts?
So what is a digital tax account? And I think the next slide might... Lovely diagram. So I always see the digital tax account as a vacuum cleaner. It will hoover up tax information howsoever it gets to it. So you think about, at the moment, practitioners, we send tax return data to HMRC. Well, the idea of the digital tax account is it can receive dividend data from PLCs, companies, or whatever. If it can be connected to someone's digital tax account, it will hoover that in. Rental income, POAE is probably the big thing, bank interest as well. And then what it generally does is it takes all this information, and it can do it in the current tax year as well. And if it's a tax year that's gone, it will calculate a liability and say that is probably what you need to pay, unless you can tell us other information that might change that view. In the current year, in the active year, the tax year that we're in, it will compute an estimated liability. So if you're employed, there's a good chance it will know from RTI what you have received as your salary, what taxes you've paid, and any P11D information or anything like that, and work out, are you spot on? Are you going to have an under or over payment by the end of the year? If there are anything else that you want to tell it, so we've got some rental income, things like that, again, it can work out what taxes you might have to settle up by the 31st of January, or make a payment on account so you're not having to make a great big payment. And that's generally the idea behind the digital tax account.
And how do they get this information? Can you give a bit more detail around that?
Yeah, so the idea is they're going to get this through the magical word of an API, which I think might be the next slide. Enter the API. Look at that, we planned this. That's brilliant. So enter the API. Let's have a look at an API. So we actually have APIs today. TaxCalc and other products like it have APIs. It's not a new thing. How did the tax data get from the software into HMRC at the moment? We have an API, but they're all one way. So HMRC are calling this old world tax software, API to send tax return data to HMRC. So let's see what the new world could look like. Yeah, lots of fun. So we've got tax software. So yes, we'll have an API still to send tax return data. We'll have an API to receive data from HMRC as well. This is where the pre-population comes from that they've talked about. Where does HMRC get the data from? Well, let's say property software. So to give an example here, you've got a client with a property portfolio. They use a letting agent. That letting agent software could be recording the income and the expenses and feed the digital tax account, which software can then pull back, have some of the data pre-populated, to which the accountant would then need to review, would need to make sure that maybe it ties up to bank receipts and other statements that have been received, and any tax adjustments that need to be put through. Because that basic liability that would be calculated will not be tax perfect. So where do accountants add value? The client might be thinking, oh, I've got £1,200 worth of tax to pay, but by the time accountants are finished with it, it might actually be £600, £800 or whatever. So you'll be able to demonstrate the savings that you have made to the client. Other sources as well, payroll information. This is what RTI is also about. So this stuff goes into HMRC, it goes into the digital tax account. That's why they want so much information through RTI. Again, that can be pulled back into the tax software. Department of Work and Pensions, so state pension, again, will go into it. Bookkeeping software, so there's been talk about bookkeeping software sending income and expenses into it for the self-employed to work this stuff out. And of course the banks with bank interest feeds. So there's loads and loads and loads of different ways of getting data into the digital tax account, and HMRC are going to build APIs to build it.
Can I just ask a quick question on that?
Yeah.
Is the property software, is that already reporting any information to HMRC, or would it be new software?
This would be a new function of property software. So, I used to be in practice quite a while ago, so it's been a long time since. But when I used to do tax returns, I was basically looking through bank statements and whatever information letting agents might actually provide. But this will be a new additional service that letting agents will then be able to offer to their customers.
Compulsorily?
Not necessarily, no. There'll be an opportunity to do things in arrears as we do at the moment, so the tax year finishes and then you can still produce everything. But the whole idea, I think, with HMRC, they want to put things into more of a real-time base, get people making payments on account, get some more money in earlier.
But they won't be doing it automatically then, these letting agents sending it to HMRC?
Well, some will, some won't. So it'd be a point of difference between, it should change up the market, I suppose, with letting agents. So some of them will say, yes, and we'll send it to your digital tax account. And others will go, well, I'm quite happy to do, work as we are, really.
Don't you think this is very dangerous? That property agents or accountants may be forced to use property software which will send information to HMRC, just like RTI was forced upon all employers. I mean, it's not a good step forward, is it?
It's a tough question. I think it's depending upon the market and what's going to happen. I'm not here really to defend HMRC in any way or anything like that, but it's the way that they're moving. So
I guess at the moment, someone pays tax through PAYE.
Mm-hmm.
They have to then put it on a tax return, and then the tax return gets filed through TaxCalc.
Yeah.
So it's doing all this round. It's going to avoid all that because there's going to be one direct input. You don't need to do the other steps.
Yeah, I mean, it depends on take that client. What other incomes have they got, and what things would the firm need to what other incomes the client has, and what the firm will then need to do to finish off that tax return.
Through PAYE
Yeah.
and RTI,
Yeah.
they will know what tax a person's paid
Yeah.
at source.
Yeah.
So there's no need to put that into a tax return anymore, because
Correct.
it's already in that person's digital account.
Yeah, and software like TaxCalc will be able to extract that through and populate the equivalent of the employment page, or when the tax returns do disappear.
But surely it wouldn't
in
need
some
to, would it?
pages.
If the RTI has already done that job, TaxCalc wouldn't need to report PAYE as well.
It wouldn't, but with TaxCalc also performing its own calculation, it will still need to know the income and taxes that have been paid.
Right.
If there are other forms of income, so if there's a big dividend or there's some rental income or something like that, it still needs to know that information in order to get.
So you anticipate TaxCalc would still be here. This is your overall tax position. It wouldn't just be all calculated in the digital account.
The digital tax account, as I understand it, will be able to do pretty much a basic calculation. The practitioner could do all the work inside the digital tax account if they wanted to, and fill in all the other tax clever parts and things like that. But that will all be online, and I think there'll be using cloud and the way you might be able to access the digital tax account through HMRC might be a little bit long-winded. So, I mean, why do people use software at the moment when there's still a free HMRC service already, or for the foreseeable future anyway? There's a huge commercial software market out there. We try and do things better than HMRC can. So they're going to produce, they're going to produce something like it. We're also going to be able to use these things through their strategy of API first. But gentleman at the back.
Does this put us out of business as accountants? And secondly, in the budget, the Chancellor did say that you wouldn't need to do tax returns anymore. Was he correct about that?
Okay, so the first question I don't think is going to put accountants out of business at all. I think you're going to see situations where the clients have got some information in a digital tax account already, and it will compute a basic calculation. There could be other things that they're not going to be able to do themselves, things like capital gains, getting rental income in there. Let's say the letting agent doesn't send this stuff through. So there's still things in there. And I think there's going to be an opportunity, as I was saying earlier, where the tax account has got a figure in there, and we'll all know that's not correct. That's going to be too big. That's, there are going to be allowances and other things that we can apply, maybe loss offsetting, things like that the digital tax account isn't going to know about. So I think an opportunity is to say, the client comes forward, DTA says, you've got a liability of X. The accountant has demonstrated, because, we all know better, that actually the liability should be a lower figure. So I think,
on the second point, do we still need to do tax returns, because the Chancellor thought we didn't need to do them anymore?
Yeah, I think that's just a snappy soundbite. So I know that HMRC really want to get rid of the paper tax return, but they're still going to have to collect data in some format, and they're still going to need it in a prescribed format for their back-end systems to be able to do the work that they need to do. So I foresee a future where TaxCalc, we have two modes of entry anyway. So we have what we call I'm not doing a sales thing, but we have a mode called Simple Step, which is a big questionnaire type thing, and a forms mode where you can direct into forms. So the forms mode might just become a direct entry mode, so just some data screens we put together just to go bang, 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 and put the data in. Or we might say, hey, we like the shape of the old tax returns. We'll keep that look, even though they don't really technically exist anymore. So there's another thing as well, I think about the paper, because I think there's loads of statute that needs to be passed as well, because as I understand it, the paper tax return is protected in statute. So some laws have got to be passed in order to do away with it. And there are some particular groups of taxpayer that either can't use computers or won't use computers, and HMRC are going to have to find some way around that. They have their assisted digital services team that they are growing, so maybe that will take over and help people there or whatever. But there are still some milestones that still need to be met by HMRC.
One thing, isn't like TaxCalc and other third-party software people going to be able to access the HMRC digital tax accounts and then populate it in their software, so it should be easier then?
Yeah, that's correct as well. So when you open a tax return for someone, boom, 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 it's actually filled in certain things for you, which you would then need to check. I mean, when I was in practice, we checked everything the client did. I imagine it's still the same these days. I wouldn't believe, a P&L that a client gave me. I always want to go back, reconcile, check, and go, oh, look, I made all these adjustments. So I think it's going to be the same sort of thing, really.
So it's effectively going to mean a double checking, because you're double checking the information the client's giving you. You're going to have to double check the information that comes from the HMRC digital tax account. And being cynical, isn't it a way for HMRC to increase their number of inquiries by having unqualified people providing information through APIs on things like bookkeeping software that they don't know how to operate, and property management software that the property agent probably doesn't know half the things that they should get right for tax.
Yeah, which is why I believe there's still going to be a year end. So they'll just accept anything up until that point in time when the equivalent of a formal submission of equivalent of a tax return is done, and say, right, I'm happy with that, and that's what they base things on. We'll see something called risk rules a bit later in the talk.
Yep. We should
yeah,
crack on with the presentation. There'll be time at the end for more questions.
If I just carry on with API first,
Yeah.
so this is what they've been doing basically. So the HMRC have said, we're going to write an API first, and then the HMRC system will make use of it, and the third-party software will make use of it as well. So they're trying to create a level playing field across these APIs.
So you've given us an example of APIs. I mean, what else do you know about
do we have one on the next slide? No, we don't. Okay. we, I know we got an API example. We could move 2 slides on if you wanted to. No, next slide. No. Again. Here we go. Here's an API. Payment confirmation. So this is something that could actually happen. And the thing that I think, as a software developer, would be of use to practitioners. So what happens at the moment? You've got accountants submits a tax return to HMRC, and HMRC receives the tax return and expects payment. The accountant informs the client of the liability. HMRC receives the payment from the client. This information goes into the digital tax account. HMRC could create an API called Have They Paid? TaxCalc could have use the API to check with HMRC for the payment, comes back, says, yes, it's been paid. Super. We know our client is actually paid. We don't need to chase them. We're not expecting penalty notices or anything like that. If we go on to the next slide, this could be something else that happens. So pretty much the same again. We send a tax return. Accountant informs the client of the liability. They haven't paid. So this Have They Paid API could actually create a report of all the clients that haven't paid at a certain point in time. So I'm not talking about 31st of January or anything like that. We're talking about maybe 30th of June or later points in the year. You can pop that report into MailMerge and then send a letter or an email to remind the client. And of course, using the MailMerge template, you can remind them what the liability was, how to make the payment, and so on and so forth. And just do a bit of a value-added thing in helping your clients remember that they still haven't paid their tax. Just another way of helping them out. So that's an example of something fairly basic that could help. Or at least when you do a report and you think all these clients, they're going to get fines in some way, shape, or form.
So in terms of what could happen next and when,
okay, we need to go back.
Let's go back a couple of slides.
So there's a timeline, and HMRC have actually been accused by the software developers of being a bit quick with this, really. November 2015, we're looking at them publishing the first technical documents. HMRC are going through a spending review at the moment, so they're putting a budget together and things like that. So if they get the budget from the Exchequer, then they'll be able to do this. February 2016, the first APIs are going to go into public beta, and the first APIs are going to be the equivalent of what we've got today. So there'll be how to send self-assessment data to HMRC, corporation tax data to HMRC, so the things that we've got today. In June 2016, the first APIs are to go live, and the second set will then go into public beta. So they're going to be in this rolling program of developing APIs, putting them out to market, things like that. And then it'll be up for software developers to deliver software using these APIs in accordance with their commercial targets. So, when's our big release date? It's in March. That's when we do so we might put whatever we can in a March release, or maybe halfway through the year, or whenever they are mature enough for us to be able to use.
Okay. And what APIs are they going to publish?
The first APIs are going to be the equivalent of what we have today.
Right.
So self-assessment, corporation tax, VAT, PAYE, all the big ones. They should move into the new world. And then there's going to be other things like, have they paid? Are there penalty notices? Are they, how everyone has secure messages from HMRC? There's an idea that maybe tax software can access those secure messages. So you can see, what has the client seen and have they had an alert that they should be doing their tax return? Things like that. Okay, so here's another thing about some of the things that are likely to be different in this new world. We all use the government gateway at the moment to put credentials in software or use it to access the HMRC site. The digital tax account isn't governed by the government gateway, it's by Gov UK Verify. So it's formally called identity assurance, and it basically uses a third party to verify the identity of the person trying to get into that account. So all the individual clients, they're going to have to go through this process. Business tax accounts, so those clients who have POE, VAT, CT, that sort of thing, they're going to be using Government Gateway, and of course the software will be using Government Gateway as well. So we'll come on to Gov UK Verify a bit later and talk about that. There'll be something to educate clients about.
Just another quick question for the audience. Who knows what risk rules are? Anybody? Steve, if you could tell.
Yep. So how do HMRC know which tax returns, because it's just data at the end of the day, they should look at? It's the risk rules. So you send tax return data to HMRC. They compare it against last year's tax return, the year before. They look for variances, for changes. Is there a new type of income? Is it 3 times the size of the last previous years? So all these little, I think there's about 400-600 tests they put items of data through. If it reaches a certain criteria, a flag goes on the tax return. If there are X number of flags, an inspector will then look at it. Have you filled in the little box to give them an explanation as to why something might have changed? If not, they might actually earmark it for having a good look at and get in touch with the accountant or with the client to say, well, why is this the case? What HMRC want to do, though, is to get better tax returns to them. So they proposed an API where you've entered the data into your tax software. So you sucked it through from the digital tax account. You've made the changes as necessary, completed the effective return, and instead of filing it as a live submission, you file it against the risk rules. The risk rules will then come back and then give you any issues that you might want to look at before it actually gets filed for real. So software like ours, and I know other systems do this as well, they will do some checks, but this is actually firing it against this sort of secret risk rules and returning in a format that our software can then interpret to say, this figure was 3 times the size of that one, is that correct? They want to stamp out things like accidental, putting too many zeros in a number or something like that. So they think if they get better data in, they'll have to look at fewer tax returns. So that's what we'll do with risk rules. So that was just...
Move on to the next one.
Yeah.
Yep.
And we've seen that one and that one.
Great.
So, is it
just a quick question there, Steve. Yeah. What APIs do you think that could be built that would really benefit practitioners?
So this is where the industry wants our customers to speak to us to say, okay, here's an idea. If this is going to happen, I'd like it to do this. Because what we've got at the moment, we've got HMRC's ear. I've got a meeting with one of their senior managers, well, not me personally, but BASDA members have got a meeting with a HMRC senior person next week where I'd like to be able to feedback from this session and say, well, here's some feedback from practitioners to say, well, wouldn't it be great if we could do this, 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 and this? The equivalent of things like, have we all heard of the agent online self-serve system? Yeah. So some of the things you can do in that, be able to do inside the software. So you don't have to do everything in 2 places all the time. Another idea of an API would be something where your client has changed their address, you update it in your tax software, and then you've got to log into the HMRC site and under AOSS, and you can update it there as well. But wouldn't it be brilliant if you could just do it in one place and just send it all the way through? So HMRC, can you build an API that would do that? So data syncing, data sharing, that sort of thing. So HMRC are quite open about this, and we TaxCalc, we've got a long list of things that our customers like us to be able to do. If an API facilitates that, I can bring it up with HMRC, but there's quite a big opportunity here to get things built that will benefit everybody. So if anyone's got any ideas or any questions or anything like that, you can always see me at the end. And like I say, I've got a meeting next week and successive meetings as well. Okay.
Great. And now we're just going to move on to what does it actually mean for practitioners. So if you can give us a bit of detail here about what's likely to change, what it's unlikely to change, that'd be great.
Okay, so there's a couple of slides that will just think about what it means. So tax years. Unlikely to change. When I went to a meeting back in March, and they said, well, we don't even know if we want tax years anymore. And it's like, well, that's crazy. You've got to have tax years. What about when do you apply a personal allowance? Between what periods? So tax years, I think they've come to this decision, actually, we do need tax years, so we're going to keep those. End-of-year accounts, so for sole practitioners and indeed under the CT regime and things like that, 12 monthly charging. We're assessing profits on 12 monthly accounts. That's going to stay the same. And tax services, because clients are still going to need tax services. Does this situation create more complexity for sole traders, for companies, or even though they might be able to see certain information in the digital tax account, they won't know everything. They won't get everything in there. They won't be able to know the tax clever parts that we all can do. So these things are unlikely to change. Opportunities, so things like the real-time tax advice. So if a client in the current tax year crystallises a capital gain, for example, that could be entered in the digital tax account, and that could give you a ballpark tax liability. Or you could use, because TaxCalc will have to get into the current tax year, we could actually calculate that real-time liability. So a bit of tax advice on the spot. This is, set aside the money, or these might be the payments on account you might want to make, that sort of thing. Universal tax credit filing. So the data, because again this is a real-time thing to get those tax credits. So the data that might be created through doing some monthly bookkeeping, which might feed a digital tax account to give a rolling liability or make payments on account, would also feed the DWP and help that client with earning their digital tax credits. And then operating benefits as well, so knowing which clients have actually made their payments, which clients haven't made their payments, keeping, not having to log into Agent Online Self-Serve and do updating over there. You can do it all through the software. So there could well be operating benefits for practitioners as well.
Can I ask about that universal credit filing? As universal credit is based on a completely different accounting system to normal accounts, how on earth would you have an economy of scale on that? Because universal credit is based on a special type of tax account, cash accounting, which is not the same as cash accounting for small businesses, and it's not the same as accruals accounting that most people use. So how would there be a benefit?
Again, a good question. I've been party to some meetings where this has actually come up, and I've seen, I saw some of the tax adjustments that HMRC were expecting to move people from accruals accounting to cash accounting, and then I understand DWP again because they want to kind of do their own thing. I would imagine there will be pressure placed upon both departments to harmonise the way they are dealing with these things.
Too late. Legislation's there.
Well, we'll have to see what happens. Again, it's not a thing I can comment on. It's something that should be able to be done. But I mean, here's this could be an opportunity for software developers. So the data goes in once, and it produces it on this basis for DWP and this basis for these are the commercial opportunities that might be presented to us. Another reason why you might want to use third-party software. So the next thing, convenience. So pre-population of tax return data. The digital tax account has got it. It goes straight into the software. And better awareness of client affairs. So, if it comes to pass that you'll be able to see what's in their secure inbox with HMRC, whether that they've got if they paid, are there any penalties? What's like to if they have HMRC allocated that payment against the right thing. So there's sort of convenience.
Yep, and there's some hassle as well.
There'll be some hassle as well, so the client authentication side of things. So in order to allow software to talk to the client's digital tax account, they're going to have to go in through GovUK Verify and authorise the accountant as to what the accountant is allowed to see. So it's a replacement for the 64 rate, basically. But as part of our consultation, and we've done that with, speaking to our customers, the 64 rate is relatively limited. You can only have one agent who can access certain sorts of, POE. You might have, You might have one agent that does your payroll, you might have another that does your P11Ds, another might actually look after your tax investigation or something like that. They'll allow all of them to look at the bits that you specify. So there is what was the other thing that was on there? And the software evolution as well. So software is naturally going to have to evolve to adopt the current tax year. Tax returns themselves, when they disappear, if your software is essentially a form filler, as we say in the trade, there won't be a form anymore. So what will their data screens look like? So software will evolve, and if your product is more comprehensive, that might lead to training issues. What's next?
Excuse me, is there any indication that if there are multiple agents involved, that certain agents are going to get locked out of changing certain data?
As I understand it, what they're going to put together is something that's far more granular than at the moment. So you might look at the sphere of payroll, but they might actually then have sub-items for payroll, P11D, investigation, all the other little things that then might actually allow. So you might say, well, this agent can see all three because they're my main reporting agent. This one's just going to deal with the investigation side. So they can only see some stuff to do with that. That's as has been suggested to them, because I think that would be, that would be a good benefit for, if we're going to change the regime, well, let's make it better than the old one. And it seems to be going that way as well.
In that situation, though, I mean, at the moment there isn't an opportunity with 648, rather than submitting a paper copy, you can get the client to have an authentication code that they submit to the agent.
Yeah.
Surely that would be better than having clients. You indicated earlier the client would have to go online, which is an awful lot of elderly clients who half the reason they use a tax agent is because they're not comfortable going online.
Yeah, that's true. Again, I know we bring this up with HMRC ourselves, because we tax calc we have a consumer product as well, and we know that there are older customers that we have, and bless them, they're still using computers in the 90s and things, and but it does add another layer of complexity for people. HMRC are going to, as I understand it, are going to bring in a new level of agent as well, which is a trusted friend. So they'll allow an individual, to assist. Well, like I might do my dad's tax return, for example. I'll be his trusted friend rather than I have to set myself up as a full, fully blown agent. So it's one of their ideas that they've got. The other thing as well is going to be the data capture screens as well. So they're gonna change. So as if they're based on forms, then there won't be a form to base them on. So software may start to differentiate a bit in certain areas.
Great. It seems like a good opportunity to revisit the same questions that I asked at the start. I mean, given what you've all heard from Steve the last 20, 30 minutes or so, who here, if you could just raise your hands, who thinks that the DTA program is a good idea? Great. A few more than last time, yeah. So, and do you think it's going to make much difference? Quite a bit of nodding going on there, yeah. Which goes on to the final sections. How can you prepare?
Okay, so something I would recommend everyone does is actually get OFA with GovUK Verify. Has anyone looked at their driving licence online? Yeah. So, and indeed, it's an alternative to the government gateway to go and do your own tax return online. Because clients, individuals and directors and partners of partnerships are going to have to go through GovUK Verify, I would recommend everyone here goes to DVLA and tries to look at their what used to be the paper counterpart. It's now all digital, it's all electronic. Going through that, you'll see GovUK Verify in action. So it will ask you for, you have to choose an identity provider. So you say, look, post office. I recognise the post office, yes, and they know lots about us. It's uncanny the amount of information that they've got about it, because they're a data company now. They know lots and lots of things, and it will ask you things like to prove who you are, who you say you are. It will ask you who do you bank with. They know this. It's on your credit report somewhere. They'll ask you who your gas supplier is, and out of 4 questions, you'll tick, was that one, that one, that one, that one. You'll get all these questions right. It thinks, well, you must be who you say you are, therefore we'll let you into this system, and you can then go and see your, your driving licence. But I would recommend everyone has a go at doing it, because that's what all your clients are going to have to do to get into the digital tax account.
So is it going to be that every single person is going to have one of these accounts?
Yeah, every taxpayer in the UK will have a digital tax account.
How's it going to cope with taxpayers that are outside the UK? UK taxpayers that don't live in the UK.
Yep. So, as part of my work with that I did with identity assurance, as they're bringing companies like Verizon, big multinational data companies, which have information on people all around the world. So there's, it's a big thing that that the last government did in building GovUK Verify. And they're going to keep bringing in more and more and more of these identity providers. So there were 5, and now I think it's going up to 9, and then it's going to go up and up and up and up.
Sorry, I don't know if you mentioned before, when does that become essential for people to register on that on gov.uk Verify?
Well, the digital tax account in a basic form is, I think it's going to go into beta later this year or something. So I think about March, April time, could change because these things do, is when we'll actually start to be able to have a good look as the public as to what it would look like. So everyone here could actually go and see their digital tax account and get, see what GovUK Verify is all about.
But do you have to register on this even if you're not on self-assessment, even if you're just pay as you earn?
If you're just on pay as you earn, then again you can go through it. You don't need to be on self-assessment. It's an online account for every taxpayer in the UK. So if you just want to see my salary information and the taxes I've paid on it, that's all it's going to show you. But you can do the idea is that you can do other things with it. So let's say a letting agent wants some proof of identity. You can push a button, and then HMRC will send you a piece of paper that that says this is their national insurance number in an official document. So it should have other things that it can do. That's the idea.
And how much money are they ploughing into online fraud? Because you mentioned about your driving licence. There's a massive problem at the moment with the online passport applications and fraudulent sites popping up and taking people's money, and how many particularly vulnerable old people are going to end up putting information in, but they think they're putting it into the right website. Somebody is going to find a way of making money out of this, and the government seems to do so little to protect the public against online fraud.
Yeah, and under the previous identity assurance proposals, there was a very definite client-to-agent link that had to be established for someone to be able to file on behalf of someone. At the moment, an agent can file on behalf of anybody with a 64.8 in place or otherwise. Identity assurance is going to change all that. So in order to file on behalf of somebody else, because this is what some of these sites did, they took the information, said this was your liability, which included a big fee as well, got the client to pay it to them, then they just inputted it into into the system, and then kept the difference. And the whole idea behind identity assurance was then to start thwarting that, because they wouldn't actually be able to input it in the first place, because there wasn't that link between the individual and the agent. I can't say how things are going to pan out, but I have had meetings with some very scary cybercrime people from HMRC that want everything super locked down in a way that just couldn't work for anybody. So they're having to find a sort of a medium between what is going to work and what should give a greater level of assurance and start stamping out some of these things. I mean, the government gateway at the moment is not very secure at all. It's a 12-digit number in a password. And these things, there's a black market that can buy and sell these things, and then people get access, and I suppose we all know what goes on there. So again, they want to try and improve the security model of the government gateway. So there are going to be things that are going to happen in the next couple of years that are going to, and what we're trying to, what we always do with HMRC every step of the way is say, okay, well, that's a good idea, but it's not going to work in practice. So here's an alternative. Why don't you consider this? And we keep pushing and pushing and pushing, and that's why part of identity assurance disappeared, because it just wasn't workable for practitioners and for businesses.
Yeah. At the moment, you get near to the end of January, you've got a UTR number, you can file a tax return.
Yeah.
With this, if we get, client 28th of January, we may not be able to file their tax return on time because we're waiting for the verification to happen.
So there's two things here. So the first is that client, instead of waiting 5 days for a PIN number to come through, that sort of thing, they should be able to log into their digital tax account. If they haven't got an identity, an online identity thing, they can get it there and then. So the idea is that instead of taking 5 days, it's actually it could all be done within the space of half an hour. That's the idea there. The other thing as well is HMRC back in February put out a proposal about penalties, the penalties regime. and they've just published the findings. So we contributed towards that because we said generally, our belief was our customers and our accountant customers wanted to make sure that tax returns were correct and people paid their liabilities on time and things like that. So stinging people for genuine mistakes or for being a little bit late, that's really harsh. If someone's really got a good reason, and with the reasonable excuse forms, they get sent off, they get rejected, they get challenged, go, oh, okay, then yeah, we'll let them off. So they're looking at trying to be a bit nicer for small incursions and for one-offs and that sort of thing, but ramping up penalties and interest charges on persistent offenders. So I think there's like a two-pronged thing here.
Yeah, taking away penalties where people have got a tax refund. File a tax return, later a refund, they now get a penalty because they're owed money.
Yeah, and that was something we put in the document. Said, well, isn't that a daft thing to do? Just because it's late and there's no liability to pay, why are you still charging them? So, yeah, they seem to be listening more, and plus they're going to automate more of this as well. So they need better rules on what to do in these things. So,
just to move things along, Steve.
Yep, sorry.
What else can you do to prepare? I mean, in addition to reading publications and such as Accounting Web, what else?
So listen to. So you can speak to your software providers as well. So you may not be using TaxCalc, you may be using someone else. You can speak to them. Do they put any? Do they have white papers, blogs, information? Do they have road shows? Can you go and speak to people? If you have ideas for what APIs would benefit your practices, then again put them forward, because software developers have got the ear of HMRC on this, and if there's enough support for something, they say they will build it. So listen and provide feedback, and then stay informed as well. So through Accounting Web, you must all read Accounting Web, and you may have seen articles where I've either given interviews or quotes and things like that, because I'm quite involved in this, and I want people to understand what is going to happen in the next couple of years. Just like identity assurance, I was like going up around the country and going, oh, this is going to happen, it's going to happen, it's going to happen, and it didn't, but but this is more likely to happen, and so stay informed and keep on top of what's going to happen. I would also say, when the basic tax account comes in, if more groovy, funky things start to happen through the software, think about, how am I going to get my client base to allow me to access the digital tax account? Because if you've got 10 clients, 400 clients, 1,000 clients, 10,000 clients, if you want to be able to get a list of all the clients with liability, haven't paid their liabilities or something, you're going to need them to do the, go into the digital tax account and authorize you as the as the agent. So how are we going to do? Under identity assurance, everyone would have had a year to do it, which was not workable at all. But with this, there'll be 3-4 years to. And there'll be a certain point, I would imagine, in someone's client base where it's worth doing a bit of a push to get all the rest to do it, because you'll get a better picture of what what those clients are doing.
Great. Well, I think you've done a great job there, Steve, of kind of looking at where it's come from and the facts that we know now and what it could potentially mean for practitioners going forward. So we've got 5 or so minutes. If there are any more questions, please raise your hand.
Yeah, I just wondered about non-compliance. If you had a client that just was missing one bit of data, for example, from their tax return, they don't need to do tax returns anymore because it's all done for them. What happens then? You might be missing your foreign interest. You didn't put that on there, and you just sort of forgot. Do they still get a penalty?
There will be, so there's a couple of things to this. So again, using the risk rules, HMRC, if there was foreign interest one year and there wasn't another, then that might flag something. So they might earmark that for, well, why has this changed? And the idea is that maybe they might open a dialogue, electronically with that taxpayer. So they'll get a message, say there's a message on your secure messages thing, they go in and there's a question from someone saying, well, what happened to your, I made a mistake, and they go and fill it in. And if it's an honest mistake, they'll, under the proposals, the idea is that they won't jump too harshly on that because that was an honest mistake. If it happens again, though, they'll, you go from green light to amber light and then to red light, they talk about it as traffic light system, so they get progressively harsher on this. What was the other thing I was thinking as well about that? There's going to be other things as well where they just don't know, but they might just randomly earmark that account for inspection and ask, are they doing things properly? So yeah.
Will this get rid of the UTR number system?
That's a good question. I don't know is the true answer. I haven't seen enough of the detail of the actual APIs and submission process, at least until...
If people identify themselves in a different way.
Yeah. Whilst tax returns are still around, we're still going to need a UTR number. When they do, disappear for good, there must be some way of being able to identify somebody. Maybe it's UTR, maybe it's a national insurance number, or what really. So.
Digging on to the on the last question, at the moment HMRC are getting information, for example, under the UK-Swiss agreement under TIAs, and then they might well do under common reporting. Is there, well, actually, partly dealing with this, the gentleman on the back's question about, are they information going in? It's quite likely that if they are getting this information, particularly if it is taxpayer specific, that could end up populating the returns as well. Part of the problem with that, for example, the UK-Swiss agreement, is that the Swiss characterise income and receipts, etc., in a particular way, which don't necessarily bear any relation into how they are taxed for UK tax return. So you have to explain to the revenue, yes, the documentation, the certificate from the Swiss fiduciary says you're entitled to report the income of this trust. No such thing, it's discretionary, so you have to explain the difference.
I mean, that may be an area where they don't build an API. They could build an API, they may not build an API. So I would imagine things that are going to be really common, they're going to build APIs for. Things that are going to be less common, like sources of information from foreign sources, that sort of thing, probably less likely to, because there are fewer things on. Like information from Lloyd's, for example. Although we support Lloyd's names and things like that, we know that there are relatively few returns that are actually done through that. So that's probably one of the last things that they'll look at on their list. So they'll go where the efficiencies can be had.
I think we've got time for one more question.
Okay.
So what's your opinion on whether this will eventually become compulsory? So for example, taking the let-in income example, if at the moment, obviously, if you're using a let-in agent, then there's the chance that will be pushed into an API and pushed back out into your tax return. If you're not using a let-in agent, there's no way of HMRC capturing that information. Is it likely that eventually, further down the line, HMRC will say, well, if you're renting out property, you need to, in the same way that you do with RTI, declare this via an API?
Okay, so I think there's two things there. There's letting software, so personal property management software, which could then get the function to send this data. As I understand things at the moment, though, there is no obligation to report in a real-time basis. So you could get to the end of a tax year and then do the equivalent of filling in the tax return and making sure the payment is done by the end of it. I think HMRC are going to need to preserve that kind of situation, because there's all type. I mean, I meet with HMRC people and I explain, but firms don't all work in this way that they think. Their firms are working this way and this way and this way, and you get distributed firms where there's no office where we got all the staff in there. They work from different locations. So with some of their other ideas, they assume they make certain assumptions, and it's not going to work like that. So I think they've kind of got the message that they still need to be able to allow things to be done in arrears, and then filed at a point after the tax year and say, right, that's the final figure, and this is the final tax.
Great. Well, I think we're going to have to wrap things up there, but it's clearly a very hot topic, and we'll be around for the rest of the day. Hope you enjoy the rest of the conference and the awards. Do come and have a chat with us if you've got any ideas or questions. So if I can just ask to show your appreciation to Steve with a round of applause. Thank you.